Good morning, everybody. Before we start officially, I just wanted to make sure that you can all see the screen perfectly and that you want the lights to be a little bit dimmed, darker. You don't need to see all the ploya after 2 years of COVID. The Botox is starting running out. So we're going to start very strictly at 10 o'clock, as I said, for the Zoom, and we have to keep with our agenda because our Zoom link is directly connected to that. Is everybody comfortable? Room temperature is fine? You all know where the bathrooms are? Fantastic. Good morning, everybody, and thank you so much for joining us at the 2022 KEU seminar. At some point, I didn't think that we were going to say 2022. It's been a horrendous year. I know that there's a lot of product training going around, so thank you for spending the time with us here today. And definitely, all our viewers on Zoom, thank you very much for spending the time here with us as well. So the past 2 years, obviously, has been an incredible, tough journey for everybody in this room and our industries. So we are just going to the next screen. So I'm going to give you, I need to click. I have to press the button, the green one. Oh, for those who don't know me, I'm Denise. I sell insurance. I haven't sold a lot of insurance in the past 2 years, but it's busy picking up. And Yola will be the second speaker. And for those of you who are too kind to ask, yes, she is heavily pregnant. There's no secret about her, and little baby is on her way on the 8th of March. So we've got quite a bit of things to do before then. So 21 years ago, KEU opened its doors on the 1st of April 2001. And in some instances, it feels like 21 seconds ago. In other instances, it feels like 210 years ago. And some of you here have been there right from the start. Hanli has been there from day one. Bye, donkey. Liz, that's listening in from the UK, from London. Liz, thank you very much. Colin, who I begged and pleaded for a motor treaty when I started all this, thank you. So yes, it's been exciting 21 years. So starting 1 April and having a loss ratio of 273 by the end of May was frowned upon slightly by the reinsurers. So I was invited for tea, not wine, not cocktails, but tea. So we rehashed, replanned, and reorganized how this is going to work. And I was fortunate enough, plans fell into place, and definitely some luck as well. And by the end of December, the loss ratio came down to 47%. So I still had a book of business, thank heavens. So 21 years, or after that, 19 years have now passed. And I thought, beginning of 2020, we were going for this. Vision 2020. I had like Cape Town dreams, and we're going to expand, and we're going to do X, Y, and Z, and life was good. And I've learned some stuff. But insurance and life definitely keeps you full of humility. And it makes sure that you learn another lesson just as you start bragging about the knowledge that you've got. So what did it teach us in the main? It's to say we are all here because we've got insureds. And especially in the film and entertainment portfolio, we are there to make sure that they understand risk, that we understand their risk, and that it is properly looked after. And service throughout all of this is king. So the 6 o'clock at night calls, the 5 o'clock in the morning weather calls, and so forth needs to be attended to. So the 19 years, I was really started to feel confident the way, the route, and everything else was sorted out, and I knew what was going to happen in the next year. Well, then this happens.
The virus was traced back to this now closed seafood and meat market, but tests have so far failed to isolate a source.
As of this morning, there have been 571 cases confirmed by the Chinese government, and 17 people are reported to have died of this new strain of respiratory illness.
We're working very closely with China and other countries, and we think it's going to have a very good ending for us, so that I can assure you.
At the conference today, they gave the virus a name, COVID-19, coronavirus disease.
This is the worst public health crisis for a generation.
To keep new cases from entering our shores, we will be suspending all travel from Europe to the United States for the next 30 days.
The International Olympic Committee, the view of athletics was to postpone the games.
So even with that happening in the international market, we thought, nah, it's in China. Who cares, really? It's not going to affect the South African market. And Africa is not for sissies, as we all know. We're going to do this. It's going to be easy peasy. Well, the timeline in the KEU 88 Monko offices changed quite drastically over a short period of time. We received an email from our international reinsurers to say in middle of Feb, you have to immediately impose a COVID-19. It was a very specific COVID-19 exclusion across all new business. By that time, we've already run through our January and some of our February renewals, so we've had clients that had cover in place. COVID before this, communicable diseases before this was given. We dished it out. It was added to your policy schedule for free. So now we stopped the cover. And immediately when that happened, the feedback from especially the events market was, but they've heard in the international market that there's been events already cancelled. European events have started being cancelled. I think China to some degree was not taken that seriously at the time in the South African context. And we were busy with a big placement for quite a big exhibition, and we had to say to the insured, no cover for COVID. He was not happy. He became quite threatening. But understanding that if his event does not pull off, he's got one a year, his company goes under. And we are now not giving him the cover that he most desperately wanted. But we couldn't source it. We couldn't source it anywhere in the world. So on the 11th of March, we were called into a meeting with our biggest exhibition client in South Africa. They are the biggest also in the country. And they were telling us that they've started receiving some international calls to say for the international exhibitions held in South Africa, they've received cancellations already. What's going on? So we needed to rehash and go through the communicable disease extension. You know, it's one of those extensions that you give and never think about, and then something happens and you reread it, and you rehash it, and you really need to understand what it is, what was the intention. That was fun on the 11th of March. By the 13th of March, Friday the 13th, definitely has a special meaning in our offices. We had to submit our very first indicator figures to Centric. And where do you start? I mean, what is the exposure in terms of film and entertainment? So every event's liability policy, every event cancellation that's active at the time, film liability. We didn't know how the crew will be affected by this in terms of a liability. All active productions, nominated key cast, total cancellations. So we ran figures and ran figures. And the figure came out to an horrendous figure, and we'll show that to you shortly. So Centric then invited us to a meeting at Oak Tree's offices. We were given wine. Thank you, Gordon. We were going through these figures and reams and rehashing again, what are we going to do? So we had to meet with reinsurers, with Centric, with Gordon and his team, because immediately cancellation starts coming through. So we do continuous cash calls. We need to understand proximate causes, specifically noted, understood, and handled. And not only from a claims point of view, but also from a premium point of view, what's going to happen. So we spent many a night working with lots of reports. On the 24th of March, so then on the 15th of March, obviously Sunday, the 15th of March at 8 o'clock, our president had his first fellow South African speech. I got into bed at 8 o'clock, and I decided I'm not listening to it, I'll deal with it on Monday morning. So on the 24th of March, we then started extending active annual events liability policies at no premium. And we said, we'll give you 3 months. We are sure within 3 months we've got this. How bad can this be? Extend policies, the equipment all risk, and exhibition, those type of insureds with physical goods, they all went back into a fire peril situation. The film companies had to pack up, wrap up, and leave. All hired-in vehicles needed to be returned, equipment needed to be sent back, studios needed to be locked down, and venues closed their doors. So we had to put all of those policies on our hiatus period, on an extension period, dealing with the liabilities, extensions, and so forth. So the administration on that was dreadful. It was really a lot of administration. And then obviously on the 26th of March, that was a Thursday, was the last day of freedom, and the 27th, lockdown started. By the 14th of April 2020, we did our first interim payment, and it was an event that was cancelled on Friday the 13th. That was the very first event that we had was cancelled and covered in terms of communicable disease, and that interim payment was then made. So that was a figure that we submitted to Centric on Friday the 13th of March. If we had to look at total book exposure, we said, worst case scenario, that's what we think. If we have to think that every liability policy is going to respond, that every film will be cancelled and all events are going to be cancelled, that's what it's going to be. We submitted the figures, cried a little, again have a glass of wine, and moved on. So as I said, in April 2020, we started with our first interim payment. There were a whole lot of payments throughout the period. But by the 14th of December 2020, we paid out up to 83 million already. And that was mainly event cancellations, and we had a film that was also affected by it. We still have some of those claims outstanding. It's not a lot of quantum outstanding, but it's all to do with international travel. We are waiting for airlines and so forth to come to the full cycle of it. So it was a lot of money paid over a very short period of time. But our focus from the start, and definitely with the help of Sydney and assessing all of that, because it became an accounting practice overnight, and with the help of the reinsurance brokers, with Gordy and your team, with reinsurers and Centric, we did continuous cash calls. We were on it all the time, and making sure that we pay claims as soon as it started, because your entire events industry came to a halt. They had no money to pay technical crew, freelancers, suppliers, venue owners. I mean, that whole chain was so severely affected. So from a claims point of view, that's where we started. That's where we ended, thank heavens. So it did quite a bit to our solvency. But obviously, if you say a figure of 9.54 billion to Centric, it affects Santam, it goes through to Sanlam, they need to report on it, and you need to stay active on all your figures all the time, and then be realistic. So they can't overestimate as well. So stressful, but it ended up a lot less than what we expected. But just to give you an idea of what happened in the meantime with the international market and their figures. So this was early on in January, this was an interview with Lloyd's of London and their estimation.
John, a tough time for the insurance market. I'm curious as to what your forecast breaks down to. So you were talking about $200 billion of losses for the industry, but that's underwriting as well as investment losses. Can you break it down for us?
Yeah, that's correct. I mean, tough time for our customers, and it's important that Lloyd stands up to be counted for the customers and pays its claims. So we've released our loss estimate today, but we've also estimated what we think the cost of COVID-19 is for the insurance industry globally, and that's just non-life insurers. So it breaks down really into about $100 billion that we think will be paid out over time in claims. So that's the immediate impact of the loss. It'll be the impact of the recession we're about to move into, and then the inflationary impact of recession on claims in the future. And then at the same time, as you know, insurers have their own investments. In effect, their money to pay claims of the future, and the asset value of those investments has fallen by about $100 billion. So all up, this could be a $200 billion loss, which financially, as you said in your introduction, dwarfs 9/11 or even Katrina, or even Harvey, Irma, Maria in 2017.
So obviously we were not the only market stressing about the total exposure and the unknown at the time. We just did not know what we were in for. So to give you some oversight as to what the international market ended up paying, so $6.5 billion were paid as a result of event cancellation. And this has all got to do this is only for event cancellation, and this is the events market worldwide. That was paid out of an average annual income of $500 million. So that gives you a loss ratio of 1,300%. Some of those syndicates only do event cancellation. So they've suffered tremendous losses. And as a result thereof, we have seen many changes. We've seen hardening of markets across the board. We have seen reduction of capacity across the board. I think that will take, from the international perspective, a lot longer to fully recover from what has happened. So yes, the market worldwide has been affected. It has cost a lot of money to the film and entertainment industry. And a lot of us don't have anything else. We don't have a property book to play this off against. All that we do is film and entertainment. Luckily for us, we've got the balance, film and events. And as I said, some of the markets were only on the event cancellation side. So that was the actual figures, and that's the figures in reality. And now Yola is going to take you a little bit further and talk to you about the immediate impact.
Good morning, everyone, and welcome. So those figures that you've just seen are quite horrific. And of course, looking at these figures, you know that claims are the biggest impact in the insurance market. If you can just go into the link for me, please. However, the year 2020 had a far bigger impact than just claims in the entertainment market. And if you look at the screen behind me, the blue area is everything that we were used to. Open events, walking without masks, going into the next shop without soaking yourself in sanitizer. And then very soon, in March, the entire world became a red zone. And life as we knew it quickly changed. And you'll see throughout the year, various countries tried to reopen their borders, they tried to reopen events, and very quickly, something that was supposed to take only 3 months have now exceeded 2 years and is still damaged. What this means for the markets, especially in the entertainment market and the individuals that are responsible for events, I'll show you on the next slide. Yes, please. So the figures for KEU, and this is KEU alone, so you can just imagine what happened worldwide. Immediately we started with refunds, and refunds happened prior to the first family meeting. These were international markets that already cancelled events that were pre-planned, prepaid for. And what happens in the event industry is that all these event organizers pay and plan for events long before it happens, hoping to receive their money back and some income after selling tickets, which of course never happened in 2020 or 2021. The number of policies that were cancelled and lapsed exceeded 213. This does not refer to 213 events, but 213 companies that are no longer able to have any events, productions, freelance camera crew that cannot go to any productions anymore. So that financial impact was just over 37 million in premiums alone. What this means is that salaries couldn't be paid, no additional amounts or no additional monies goes to taxes, and it was a massive, massive loss for South African entertainment market. The different effects that it had on events versus film, of course the events industry got hard knocked and it was an immediate financial loss, and that was because our trigger was very clear. It said, should there be a cancellation due to a communicable disease and it caused government or border lockdown, there is a payout. So immediately there was payouts to all the events companies. Under the film industry, there were 3 possible triggers. The first one being under your nominated key cast and crew. This means if one of your nominated key cast and crew fell ill due to COVID and you had to cancel or postpone, then this would pay out. The other 2 triggers were under public and employer's liability. So did the insurance or did the production company do all that they could to keep their crew and public safe? And luckily they have. Under the events industry, they have yet to recover. We are starting to see an uptake in some of the events, but it is very few and far between. And of course, the events are much smaller than we are used to. Under the film production, local production companies were able to recover quite quickly, but the international market suffered severely. And this is mainly because people come to South Africa, it's relatively well priced, and of course our weather is mostly amazing. So it just didn't make sense for them to come to South Africa anymore, because now they have to quarantine the entire crew for 7 to 14 days when they get here, and then again quarantine for 7 to 14 days when they get back. And the financial impact of that just didn't make sense. What this will mean for the future of international productions, we are yet to see. Now, as Denise explained earlier, majority of events got postponed. We immediately postponed all annual policies with 3 months for no additional premium, thinking that this would not last longer. And soon all those postponed events then got completely cancelled. Under the film industry, they went into a hiatus period. They were able to take a break, revamp their schedule, and was able to film again. What this meant for the events industry, how they adapted, most of the events went from physical to virtual, and we all know that just is not the same. You'd much rather go to a physical rugby game than watch it over TV. And in the film industry, we saw some changes in catering. Usually they have large, big buffets where they can do lunch, and now everything has to be pre-packed, extra plastic, and there we saw an increase in food poisoning. So they had to rearrange all their plans, and they quickly did. The film company is quite adaptive, which is brilliant. We saw smaller crews, but bigger budgets, and this was mainly due to trying to comply with all the new safety regulations and COVID regulations, all the new testing. We can't cross-contaminate brushes anymore, so you need additional makeup brushes, which had a big influence on the film budgets. The equipment and prop sets, wardrobe, what would all the sanitizing have an effect on all those equipment? So they had to rethink about that. And of course, the accumulation of sanitizer had an increased risk in fire. And in the midst of it all, whilst we were still coping with everything and all of this drama, we, of course, had the lucky draw of having one of the biggest riots and strike events in the world. Now, under the events industry, this did not have a big effect because the events still weren't operating fully or hardly. So the events industry, we didn't have any claims. Under the film industry, however, our claims exceeded those of COVID claims. And again, I think this is mainly due to our trigger point, which says that should you not be able to arrive on set due to a riot or strike. And that, ladies and gentlemen, was the year 2020 and 2021 for KEU in a nutshell. If you have any questions, Denise and I are happy to answer. Unless I all stunned you.
Just to quickly tell you that we had a Zoom poll running whilst we were doing this. And the question was, when do you think the event industry will be fully recovered? And your choices were either 6 months, 1 year, more than a year, or never. Well, luckily, only 13%. We keep on coming back to this figure 13, but only 13% said never, because it has to recover. It has to recover for so many people. 72% of people said more than a year, and 1% said 6 months. We have to tell you, though, that we are seeing some new exhibitions that we are busy working on. It's planned for later this year, but there definitely is hope that exhibitions will go back into what it is. Obviously, at the time, currently still with the state of disaster that's not yet been lifted, you still have accumulation limits in terms of how many people you can bring in. So Justin Bieber, we're not insuring it, it's part of a world tour, but that's an interesting one, because you need to have a sell-out audience in order to pay for a big international tour such as that. So it will be an interesting one to see how they're going to make that work, and then that hopefully by the 1st of October, I'm sure you've all bought your tickets. You ready? Yeah, Cape Town and Joburg. And we're all going to stand there in the golden circle and dance with him. How is that going to work out? How is that going to make it feasible for a rand ticket sale to pay for an international big ticket artist? And the way that they normally get around that is to make sure that you've got enough people in the stadium. It just absolutely makes sense to do it that way around. So there's an uptake, definitely. The film market, as we said, recovered fairly quickly. On the 4th of May, 2021, it was a Monday morning, they were all allowed to go back onto set, but with various challenges. It was so new to us. We had to review what do we say now in terms of this new filming procedures, budgets being spent on COVID, and so forth. So it was definitely a learning curve for all of us to understand the risks and to underwrite it properly and to work with our insureds to see that through. And then by the end of last year, we saw the internationals slowly but surely started coming in. And then, damn, Omicron hits us. And all the internationals immediately flies back. So we were insuring both the Joburg Open and the SA Open. So the Joburg Open started on the Thursday, and they played Thursday, Friday. We had massive storms on that Friday afternoon. And then by the Saturday, they had to put all the international players on the plane and fly them home so that they can get out of the country. We are now on the red list. So immediately, the planning for that entire event was ended after 2 days.
Even the commercials that we've seen. So again, a lot of South African production companies shoot commercials for the French industry, and that immediately came to a standstill. Everyone literally in the same day packed up and left. So it had an immediate financial impact.
Yeah. So we are all obviously all hoping that at some point in time we can see a little bit more of that happening. The events that then started out, so just after lockdown started to ease up a little bit, a lot of sporting events, so cyclists and so forth that were able to do it, so they can spread 200 cyclists over a period. But no spectators allowed. Obviously in schools, no spectators allowed. And now we are seeing some of those at least that's returning back to some form of normality.
Even though if you drive past the schools, you would see all the dads sitting on the roofs of their buckies trying to have a look at what's going on and where the children are playing. So the rules were there, but it was difficult to implement.
Yeah. And I think at some point we all got very sick and tired of Zoom.
Yes, most definitely.
We Zoom everything in our lives away. So, yeah, it is going to be good to actually go back to have human contact across. And for the technical crew as well, we have seen some of our companies, there's a rigging company that actually went into sanitizing, COVID sanitizing, just to make a living throughout that period. Outside broadcasting companies that used to work in the international market, especially when they do the big AFCON Cups and so forth, and the Mauritian Open, all of those trucks were just pulled into a warehouse and locked, and people sent home. And a lot of people, the technical crew again, a lot of them has left for overseas. Saudi seems to have been quite a big market for them. So hopefully we can then attract those people back here. South Africa, from MultiChoice and DSTV, they've just launched quite a big event earlier this year in Dubai to reopen that section and that market to South African entertainment. So there are things being done to reopen it, which is absolutely fantastic to see.
And despite everything that happened in 2020, we did see the event market try and re-innovate what they are doing to try and they were going through the worst times of their lives, and we saw event companies taking their equipment, their catering equipment and their trucks to go and provide food for the elderly. We try to adapt our policies as much as possible to assist them in this crisis, but to see that these people that are suffering the most are still out there trying to help others, that makes you feel truly South African.
Yeah, and we've seen quite a few of those. And at the beginning, when Easter was cancelled, who cancels Easter in South Africa? Who stops 3 million ZZE commuters going to Maria? I mean, that was just unheard of. I think what we have learned as South Africans through 2 years is that, yes, we can do it. Yes, we can make it. Yes, it was difficult. Yes, we drank way too much wine, but we did it. And we hopefully have now a good story to tell going forward. So if any one of you have any questions here in the room, you unfortunately have to speak on the mic, otherwise the Zoom listeners can't hear you.
In terms of the Zoom, we are also connected, so we can see any questions that are coming through, if you do have any questions.
Okay, anything? Any comments just that you would like to make? We have stunned you into silence, into utter silence. That's great. Thank you very much, people. We're going to take a shorter break. I think we're going to come back at, say, 5 to 11, so we can take a little bit of a break and reconnect and quickly have a Skinner session with those people that you haven't seen in many years. Have some more water and coffee, and for the Zoom listeners, we'll see you at 5 to 11. Thank you very much.
Thank you.
Hi, good morning. Thank you. Thanks for coming back. I'm always just, so happy that you came back and sit and join us yet again. We've got a bit of an internet issue. We also sell transmission failure cover. Maybe, Yola, if you can just quickly sign a policy somewhere. But we will go into that policy and the technical terms about that a little bit later on. So our Zoom guys, are they ready for us? Okay, so our Zoom audience has also now joined us. So we're 5 minutes earlier from our break, so thank you very much, everybody. And Sydney James is from Nardre Risk Managers, and you would have dealt with him in one of two ways. He does a lot of risk surveys for us, especially on the film sets, where we have big locations, where they specifically built the locations. And also on the event side, we use him quite a bit, where we have annual event policies and where we insure the venue. In some instances, if we are unclear about some of the events that we are insuring, he's also then present at those events. So when COVID-19 was then confirmed as a loss payable in terms of event cancellation, we appointed Sydney to look after that entire portfolio, because it ended up proximate cause has been confirmed. There was no question about it. Now we had to make sure that the client is settled in terms of the policy. So how did they actually insure? Was it based on expenses incurred, income, ticket sales, sponsorship, and so forth? So Sydney is going to run through with you how do we look at a cancellation claim. It doesn't happen often, and it definitely doesn't happen in the scale that we saw in 2020. And the other thing that happened in 2020 is that we had some of the events that had to start Friday the 13th. We then knew that it was an immediate claim, but then there were also events scheduled to happen in December 2020. And how that plays out over a period of time, and how do we consider all those facts and figures. So I'm going to give you over to Sydney. Thanks, Sydney.
Thank you, Denise. Good morning, ladies and gentlemen. I think some of you know me from areas that you probably saw me. Started off my career, we had an interesting discussion now in the break. How did we how did I end up, or how did we end up in the insurance industry? And most of us are actually accidental insurance people. Now, I started off as an accountant. I'm a trained accountant, and for my sins, I went for an interview at Alex Forbes, but I thought it was Arthur Anderson. So when I got to Alex Forbes, I found out that it's an insurance company. Well, it was in an accounting department, and that's how I actually ended up in the insurance field. Accounting was really not something that I wanted to do back in the days, but it was just a natural thing for me. But eventually I branched out into portfolio management. That's where I ended up at places like Regent and Centric, Compass, and all that. Eventually thought that, there's one thing that is actually lacking in the insurance industry, and that's risk management. We get a risk on your desk, and you underwrite it based on what's on paper, but you don't physically know how to actually assess if you actually pricing it correctly. Now, in the events and entertainment industry, that is actually crucial, because no one risk is the same. No one event is actually the same, because sometimes when you actually do your surveys and your risk assessment, you find out that what the people put on paper is not really what is factual there. They will tell you that they do have fire extinguishers. Yes, you do have a fire extinguisher, but that thing is not serviced. So if a fire actually happened, that thing will just blow nothing. So it is actually interesting that in this case on events cancellation, when it actually happened, I had a nice discussion with the insured. You know, you get coffee and you are entertained and you're put down and everyone is happy because this is a claim that you're going to adjust or look at. And I think the approximate loss was about 160 million. So the client was very happy that, you know, we'll get probably close to 100 million, 130 million or whatever. But then the discussion started when we sat down, accountant to accountant. I think when I explained to the insured or the person that actually had to deal with me that I'm an accountant, they started realizing that, okay, now I need to get my debits and credits correctly, otherwise we're going to be struggling. So what we're going to discuss here today is what process was followed when when a claim in events cancellation actually do occur. Okay. So all right. Now the policy states the insured may not cancel in the event in isolation, and it must be with the express knowledge of the underwriters and appointed assessor, which will be in contact with the insured at all times. In the event of cancellation of event that complies with the policy, so once the claim is approved to say no, it is a claim, the insured is requested to forward the following documents. Spreadsheet detailing the claim request. Now the spreadsheet, when I ask the spreadsheet, that should tell you that this person knows some sort of accounting. Why do I need a spreadsheet? Because I need to understand how did you actually get to what you actually claiming for. Because it's difficult for you to send me a PDF and say, this is how we got to that. It delays the process. It makes my life difficult because I have to decipher how did you get to where you think you got to. So a spreadsheet actually assists me, and it assists me to say, okay, this is the formula that was used, and then we can debate how did you get to that. Invoices that substantiate the claim. Now that is important because you cannot just claim for an amount, but you don't have the necessary substantiation to say, this is the claim, and this is how I got to that. Now, it becomes a technical calculation, being sales less your direct costs equals your income. Now, let me explain how it actually got to us having to have an accounting, basic accounting discussion, because the claim was based on sales. And the insured believe that that is their true loss that they actually incurred, and that is what needs to be paid. Now I had to explain that the sales less the direct cost, the actual sales that actually is for, say, the exhibition or the event, less the direct cost to actually host that event, is your income and your actual loss. So the issue was the income or the sales. Now, when you actually suffer a loss as an insured, it is what you physically, as an insured, has suffered. I had to go to the basics to say, okay, let's look at the scenario that this event concluded successfully. What will be your income for that event that you physically have in your bank account that you can pay your direct expenses, your payroll, and all related expenses against that income? That is your physical loss, not the sales, because the sales relates to what you get into actually host the event and what you pay out of those sales to make the event a success. Now, as stated, the sales relate to all signed contracts with deposit conditions. Why signed contracts? Because you cannot claim for an unsigned contract and you say, but we would have or we should have. The would have and should have are not actual factual, because you have to work with documentation that's in front of you. It's signed, it's agreed, because that company could have decided, no, we don't want to be part of this event. Your direct costs relate to all expenses incurred to host the event. Now, that will be security and all related type of expenses that you incur, not your cost, not your payroll, not the insured's payroll, paying people to actually do the work of the insured. But it is anything auxiliary to how to host the event. Now, the income is what the insured would have earned if the event concluded, which relate to the insured net loss claimable. Now, that is usually an anomaly when it comes to the accounting practice when you say net loss and you say income. But in the insurance term, that is one and the same. It's actually what you lost, but it would have been your income. Now, your sales would be your confirmed contracts. As an example, 5 million. And then we had your 5-year average calculation on revenue. Now, the average cost would be where you have ticket sales at an event. You as an insured has ticket sales or anything that you actually generate income on that event to make sure that you have sufficient income. And then that is usually taken over a 5-year, or if it's less than 5 years, the 3 years average. And that is usually taken into consideration because that would be income that you would have earned if the event actually occurred. Even though you might not have sold anything, but over the average 5 years, you might have sold that. So average will be taken into consideration. Now, the direct cost would be, as explained, all the costs that relates to the hosting of the event. So now we get to the claim calculation. You have your sales, less your direct cost, gives you the income that the insured would have had. In this case, the event actually almost concluded. So it was close to hosting. So most of the deposits were already received. So in this case, the insured received deposits in their bank of 3.95 million. And they actually expensed through the various suppliers the amount of 2.6. That gives you an income to date that was 486. Now, the difference between the two would be the insurance income due, which is 1.6. That will give you exactly the same amount that is claimable by the insured, 2.15 million. Now, the final calculation refers to the refund of the deposit, because in this case, all deposits needed to be refunded to the exhibitions or the events companies that wanted to actually partake in this exhibition. And then the part of the insurance income, which is a 1.63. And that will give you a total claim of 4.7 million ex-VAT. Now, in this case, the amount of the claim, if we just go back, where the argument was sales. The amount looks, it's pretty close to that amount because the event was already there and it was about to actually conclude. But the issue here was that the deposits received were actually what actually brought about that claim being close to the total claim amount. Now, where an event is cancelled in the future, this is where your policy actually would respond to the event, because it would be in the future. Say it's in the month of March, but this event happens, say, in June, July, or August. Now, in this case, there is nothing that is concluded. There is no contract that's been concluded, but this event would have happened if lockdown did not actually create, or COVID-19 did not create the issue. Now, lockdown was not really the insurable, the trigger, but it was COVID-19. And anything related to that going into the future, the argument was always, no, but lockdown is not insurable. But what actually created the lockdown and the event being cancelled in the future, it was the COVID-19. So the trigger was there, the trigger trigger everything up to the expiry of the policy. Now in this case, you had to use average. So the average was taken from the accounting records of the insured to say, this event that you've actually, or exhibition, whatever, was hosted in the previous 5 years. So give us your average that you would have earned. And that is the calculation that we got to. So the total was the income of 785. So the direct cost was 350. The average of sales less direct costs gives you the 785. Deposits in the bank less the direct costs. Same technical calculation, and that gives you the 1.3 million rand that was actually paid. If you look at the income there, the average is 2.9 million that the insured would have earned. But because it was average, you had to actually, and there were no deposits or a limited amount of deposits that has been received, and that is the deposits less the income due, which gives you the total amount that was paid. So what is settled? The net loss of the insured, refundable deposits received in the insurance bank account, because that's not really the insured's money to actually hold on to. And where we also had a discussion is that we cannot settle amount that you would not have earned, because that would be enrichment. Where only expenses are insured in the claim will only be settled when those expenses incurred are substantiated. Because you cannot actually claim for any expense that you assume would happen when you don't really have the physical invoice received from the insured. Any questions? Nothing.
All right, Sydney, we did receive a question, from one of our Zoom viewers. So I just want to quickly get into that. So the question asked is to say, are you allowed to insure for sponsorship? And the very easy answer is yes, you're allowed to insure sponsorship. But people need to understand what is the impact of a sponsorship. One of the claims that we dealt with during COVID had a sponsorship element to it. And it had to do with a billboard and how that was worked back into the contract. I think, firstly, when all of this happened, it was the first time that everybody started reading their contracts.
Yeah.
And some of them either were signed 2 years before, weren't signed, they couldn't find it, So that was firstly a very interesting looking around for contracts at the time. So you need to understand, in terms of event cancellation, what is your exposure to your sponsor? So if we have a day like today and KEU is sponsoring it, what do I expect back for my sponsorship? And the event does not take place. Have I earned any real value from it? Either from an advertising point of view, you've put my banners up there, so did I earn anything from that? Or is sponsorship just the pure amount of money? I am sponsoring the drinks that you are drinking. Because you have drank the drinks, sponsorship has come to fulfillment, and therefore it's a claim in terms of the policy. When we are providing quotations, we are very specific to say, what is it, Mr. Insured, that you want to insure? And very often we say the response comes back everything. But what does everything mean to you? So look at the reality of event being cancelled and what is it that you want in your pocket. So sponsorship could very well be a form of a barter agreement. You are sitting at the Radisson Hotel and the Radisson is giving it to you for free, so it's not a real value, but you are earning that by means of not paying for a venue cost. But now the event hasn't taken place. You haven't suffered a financial loss. You didn't have to spend the money in terms of the venue. I think in one of the claims when we spoke about the billboard,
Yes.
that carried on for quite a while. That's maybe a good point to bring up in terms of sponsorship.
Yeah, I think the issue there was the MTN billboard charges that was actually received, actually income that was received from the insured. And the question was, how did you suffer the loss? Because MTN's billboard was still flashing MTN at your venue. How did you suffer the loss? So it was just assumed that, no, we can claim for everything. Also rental income that was claimed, where some of the tenants actually decided that they would be working from home, like most of us. But you were still given maybe 3 months grace period to pay your rental income. And some of them took that rental income and came back, but then the claim was for the entire amount that was asked, that was due. Now, on the sponsorship issue as well, and the barter issue, where the insured would actually argue the fact that, but this is an amount that we accrued for in our income. But yes, but that's not physical cash that you would have received. It would be maybe for hotel accommodations, where they would be able to have an exhibition on your floor with the same amount value, and because you did not actually utilize that, and they did not utilize it, the two cancel each other out. So the whole argument and the whole issue around the claim was actually more the basic accounting on income and expenses, and your income that you actually would have earned, your loss that you've incurred or would have made, or your profit or your income that you would have made if this event concluded. I think on the contracts issue as well is that a contract that you actually that you enter into 2 years before, and it's not signed 2 years after, doesn't mean that you can now claim for it, because why was it not concluded? When you look at history, when you actually concluded most of the contracts, it would give you an indication when are those contracts on sponsorships concluded before the event happened. So it's not that claims are just, or your substantiation is rejected. But if you think about it, you cannot agree to allow for a claimable amount that is not substantiated. So there's no signature. You haven't signed, and your sponsor hasn't signed. Because once you have a signed contract and the sponsor says, yes, we would have, that is claimable. But if you don't have a contract, similar to a exhibition or whatever, would have wanted to have an exhibition, but haven't signed the contract. Doesn't mean they would have actually been on the floor. So it's just the basics of making sure that you substantiate your claim.
The one area that we had to deal with as well was media sponsorship. So one of the events had an agreement with one of the broadcasters to say that they will exclusively run their event in various ways in media. So it would have been print, television time, and so forth as well. Now, this was one of the events cancelled quite in advance. So the insured's argument was that they are losing the value of that sponsorship. But again, it was not something that came to play at the end of the day. It was not actually utilized. And the media company then agreed that they will just postpone that sponsorship back whenever the events are starting to place or to play again. But the media company then turned around to say, but the expenses to run this, so if the contract value for this year is, let's say, R1 million, and I promise to give you the same services in the next 2 years, then that contract value might now be worth 1.3 million. So who's actually losing the money? And how do you then account for that in terms of an event being cancelled? But I think the basic point that we need to take is, what is your physical loss suffered? And if it is in terms of advanced ticket sales, prove the advanced ticket sales, most of it, so we, from an underwriting point of view, won't underwrite advanced ticket sales unless you've got some history. You need to click it on something. So if you are hosting an event for the very first time at the Greenpoint Stadium, and you are going to invite Denise to come and sing, and you are going to have a sellout crowd, and you want to insure it for 5 million loss of income, I won't do it. I won't sing. But you've got no basis. I've got no record. I've got absolutely no statistics onto how am I going to do that. Because remember, these events are planned a year in advance. So what happens within that year? What's happening with the cricket that's starting, the Cricket World Cup, then all of that type of thing. These things take a long time to do, and even international conferences as well. Understand what the impact is of that you are insuring. We are currently also working with an unfortunate matter where I think the basis of settlement was not made very clear to the insured. So in this instance, the insured submitted a spreadsheet. It's fixed cost per month. It's at a venue. So they've had years of experience on it. Fixed costs were given to us, both in terms of income and expenses. The claim happened, and it had nothing to do with COVID. It's a recent claim. It was continuous rain over a period of time, and the venue had to be closed down completely. And the insured then submitted their costs for, I think, 800,000, if I remember correctly. The adjudicated costs came down to 60,000. Now, do you want to see a disappointed insured and a broker on their back feet? And when you take them back to the request for information submitted and saying, but if you said to me from the start that your expenses to run the canteen, for instance, or your income in your canteen, you can prove that, you've got enough of that, is 600,000 a month. You can't then just insure it for 50,000. Because that's not the real expense in terms of your claim that you are then submitting to me. And we find that very often that the insured do not understand the basic principles when we come down to a settlement. They don't read the contract. Well, nobody reads. Let's just be honest. Okay, we try from time to time. But they don't read that. And I think from a broker point of view, it's incredibly important for you to make sure that the insured understands what is the bottom line. He is not going to get a full check. Other than the event that was cancelled on that Friday, the 13th, they got a full check minus R3.50 type of thing. So that meant that the insured had exact figures. They knew that if that event is cancelled, this is where we are at. And the event was cancelled literally a day before they had to start.
Yeah.
So that's everything has run 100%, and we had to settle the full claim.
A relating question that we just received did ask if you do not have budget to insure the full number of expenses, can you insure on a first loss?
So, no. No. We don't. So what we do allow is that you be selective in terms of your budget. So if you say to me your total sum insured, total expenses incurred, if everything goes wrong, is 5 million. Select out of that 5 million what you want to insure, but don't do a first loss. All that happens is that we just up our rates even more, so don't do that. Tell me what is your actual loss, venue hire, technical crew, catering, security. Go and have a look where the actual loss is going to be suffered, where it's easy to measure it, and then insure those line items. But then understand that if there is a claim, and between Sydney and I, and we look at the figures that's been submitted, underwriting becomes your claim. But it's not a first loss limit type of policy. It's specified expenses, select your sums insured. So if you say to me, my venue hire is 500,000, but part of that is sponsored, so I'm only going to insure 300. The hotel, the Radisson, will pick up the other 200. We're not going to pay anybody the 200. We're only going to then pay you on the 300. So the sums are done based on the actual line item.
Yeah, and regarding the claim that was actually adjusted to that amount less than what the insured was, the broker actually brought in a public loss adjuster to look at the claim, and I think we explained and gave the basic accounting to the loss adjuster to say, this is actually how I got to that. And these are the facts. This ties up to this substantiation of this amount. The loss adjuster, the public loss adjuster, just disappeared for a couple of months. He was contacted.
He's still not back.
He's still not back. He still has not really come back to say, dispute the claim, because it is what it is. If you stand by your adjusting with regards to the facts that's in front of you, no one can dispute that. And that's what I believe in. I'm very pedantic. It's probably because of my accounting background. I also explained to the guys is because back in the days you had to have a manual spreadsheet. You had to write it with a pencil and write it out. And if you make a mistake on your tally roll, you had to look at the tally roll and bring it back and see where you made a mistake. That made you pedantic to make sure that you do it once and do it correctly, and make sure that your integrity actually stays intact, that you can stand up against any scrutiny with regards to the claim, because I believe that if someone has suffered a loss, you have to put the person back into the position that they should have been, not less and not more, the amount that they actually would have received and the amount claimable.
And most definitely we do that in good time.
Yes.
If we receive the paperwork, because that's a big issue that we deal with. People sometimes don't know where to go and find the Excel spreadsheet. So if you've ever dealt with KEU, anyone in our offices, both film and events, you know that we are a stickler for a proposal form and a budget. And the reason why we do that is that in the event of a claim, it is just so much easier to go and settle the claim. Do we understand what's going on? Do we know what the actual expenses, income, sponsorship is? Or there might be figures. So the insured, we received a claim, actually it was on a film more so, but the same principle applies on the event, where a big chunk of it is insurance. Now, we don't insure our insurance, so we don't pay out you to pay us because we don't charge that again. So basic principles, and we make that incredibly clear in terms of underwriting. And if we are not, tell us that that's not clear enough, so that the insured is not sitting with an illusion that he's going to get a chunk of money that's not payable in the first instance. It's absolutely our goal, our duty, our job, our moral responsibility to make sure our insureds are put back in the same position as quickly as possible, because they need that capital either to go and shoot again or to rehost another event. So we are a stickler on information. And I hope that it would prove the value for it in terms of a claim at the end. Okay, so there was
Yes.
a poll.
We have a question.
Oh, Justice.
Just really quickly, again, looking at your policy will always show you what line items are excluded. And one of those exclusions can also be merchandise. Where the difference comes in is, are you able to reuse the merchandise, yes or no? Or prizes, for example. We won't insure prizes if we're going to give away a prize to Mauritius for a week, which sounds brilliant. Will we insure that? No, because that is still something that you have. You're not going to lose it in the event of a claim. So you can only insure those items that you will lose in the event of a cancellation.
Hi. I'm sorry, I was just curious, that claim you mentioned earlier, the 160 mil, you didn't give us your final settlement figure. How badly did you adjust that one?
How badly?
Yeah.
Was that
well, I mean, from the standpoint of the client, because
Yeah.
there was an expectation
Yeah.
of this 160,
Yeah.
or at least roundabout.
160 million, yeah.
But what was your final settlement figure for it?
Remember what they claimed was a sales amount, which is
Yes.
not their true loss.
Exactly.
So that claim was actually settled about half of that amount. So disappointment was there, but I think the insured realized that that was not a true loss. And what also assisted in the understanding was the fact that the event that was about to conclude actually made them realize what the actual true income was. So it was a lot of arguments, but we just always had to revert back to the basics to say, let's look at your previous years. And then we went through your general ledger and your trial balance. The good thing was that I dealt with the accounting department of the insured. So they understood. Sometimes they tried to play, they had amnesia. And then I had to just keep on bringing them back to basic accounting. And when I say, let's go back to basic accounting, it's always an insult to anyone that's got accounting training. When you say, let's go back to basic accounting, then they start understanding what you're trying to say. And the insured was not happy, but the facts were the facts.
Yeah, I think it was, obviously it was a fair settlement. We won't do anything other than fair. But also, some of those events were only planned for November. And the claim started coming in March already. So if you have an event that's hosted in November, you have not yet secured or run expenses in terms of catering, electricity, props, infrastructure, and so forth. So there's a lot of things that has not yet happened. But for every single event that was then cancelled, a payment was made. Actual expenses incurred at that point in time, contractual agreements and contractual abilities and responsibilities that the insured had, that was settled. So when the insured presents, because that was the annual insured, when they present, they give us estimated figures to start the policy with, and then it's declared by endorsement as the events actually play out.
Yeah. And I think with regards to the outstanding amounts that relates to flight costs, I think the insured wanted to cancel or settle this flight costs expeditiously. Now, I said it's good and fine that you want to settle this expeditiously, but on your spreadsheet and on the airline's website, because I would go through every ticket that you actually want to claim for. I look at the tickets that you confirmed, go to the airline and see what the policies are with regards to the COVID claims. Now, that's where the stickly point comes in, where the insured wants to settle this at an amount that they believe they would suffer, but the airline says, no, we'll refund you. We'll refund you a portion. Or we extend this voucher for you for 2 years. So you can only claim after that 2 years has expired and you could not use that voucher.
Yeah, because this insured is hosting additional events.
Yeah.
So they can still make use of some of the tickets.
Yeah. And if I look at the amount that was claimed and versus the amount that we've received now in, say, February, it's about half the amount already that was refunded. But there's still airlines that says pending, not yet finalized. So
Yeah, it's
until
not-
such time we can substantiate and be 100% sure that you cannot use that, and the airline says we bankrupt or we under rescue like Mango and all that, then you know, okay, you're not going to get a cent out of this. We have to settle this.
We have received another question online to ask, what if the film period needs to be extended due to a claim? For example, the location burned down. Would the additional insurance premium not be payable for the extended period and turn need be insured?
Okay, so in terms of film periods being extended, and we see that on an ongoing basis, but let's say location has burned to the ground, you have to rebuild it, we pay for the rebuild, and then we pay for the additional expenses up until that actually concludes. We very seldom charge additional premiums. Where it comes into play is if you have now an extended period of insurance with equipment, and we have to add SASRIA to those extended periods, and or personal accident. We take into consideration that whilst you are rebuilding your location or your set, that you have limited crew, you've taken some of your hired-in equipment back, so you don't have the full exposure. You've come to an halt, or you go to a different location. We then look at the man days and so forth. Very often if you go from, we're currently dealing with a matter where the director fell ill on the Saturday, they had to go into a reshoot the Wednesday. We don't charge for that Wednesday again because it's basically a rollover. Because he was ill on the one day, they couldn't shoot, and there's not an extended period. So it depends on the time period, and it depends on how long you're going to go over in your budget. But whatever premium we charge, unless personal accident to motor and so forth, it can't form part of the claim, so we can't pay you to pay us. So the same principle applies for that.
Yeah. The other interesting thing, it's not events liability related, it's more, say, film or commercial, where property is actually used in a shoot. And what's important is that a pre-inspection needs to be conducted in order for you to determine what damages occurred. Now, I had an interesting claim where the owners of the house had a disagreement with the production company because their neighbors were actually doing construction and the insured could not shoot. So they canceled that contract based on the contractual obligation that there should not be any noise for that. What happened is that the insured left, but left the electrical equipment still plugged into the insured's main supply. When the insured came back to actually decommission the electricity, the homeowner said that, no, you guys blew all our appliances in the house because there was a power surge. Now, the proximate cause was a power surge, but the insured did not, I think the insured should have insisted to decommission the electricity and restore the electricity back to its original state when they left. Now, you could not determine if that was done intentionally or not, because the power surge did happen. But the house owner wanted brand new appliances. They wanted, and they had state-of-the-art,
We received a shopping
imported,
list.
yeah, imported stuff. And I asked the electrician to really go and do a thorough analysis of the issues. Now, they went appliance to appliance, light bulbs. The owner claimed for every light switch, light bulb, everything. I said, go through every single thing. And you tell me if you can fix it, and if you can fix it, fix it. Because you need to put the person back to where the original state. But the homeowners were not happy because they had a disagreement with the insured. Now, we're losing this income. Let's see if we can remodel our house. And that is what we pick up on most of the cases. people want their house repainted. It's like you have a chip on this floor, on this wall. They want the entire house painted. They want the entire floors. For one piece of tile that's out, they want the whole tiles. But when you actually tell them that this can be fixed, and if we fix it, it's at your original state that you are. That's why a pre-inspection is always important, because then we can determine. I mean, we had a house back in Camps Bay, and you would think those houses in Camps Bay is in an immaculate state. Now, this production had to shoot, and we did a pre-inspection, and the water damage and the dam damage in that house was horrendous. The cracks in the house. And when the shoot concluded, and the property owner wanted to claim, I said, no, let's go through the list. You see, this was damaged. This is, all right, no, we understand. Once they realize that there's a thorough inspection of your house, they come down to say, okay, I can't budget my maintenance of my house on the shoot that actually concluded.
Yeah, we have seen some weird and wonderful location damage shoots. All right, so the poll that we did, the question that we asked for our Zoom listeners was, what do you think is the most important line item to insure in terms of event cancellation? So either ticket sales, expenses, sponsorship, or profit. And 50% of the people said expenses, and 24% said ticket sales, 22% profit, and 4% sponsorship. Remember, ticket sales are very easy to insure if it's pre-sold ticket sales. It's an easy one to do. Also understand then that your contract to your ticket holder should say that I'll pay you back. So we've had some agreements where they've received ticket sales money as an income and then decided that they don't need to give it back. When COVID just started, one of our very big events had liability but not event cancellation. It was sold out. It's a very well-known big event, somewhere very remote, so you need to do a lot of effort, make a lot of effort to get there. And when the event was cancelled, they said, we are talking to our insurers with regards to refunding of ticket sales. So we had to gently advise them, you don't have the cover unless it's placed somewhere else. So people need to be clear in their intent. What do you want to do with a ticket sale? Give it back to the individual or hold it? Or in some instances, they would keep it and then only have a carryover for the next year. So some of your bigger events, Comrades, Two Oceans, Cape Argus, that type of thing, they very often then say, well, if it's not going to happen this year, hold on to your ticket. Your entry is then automatically in for the next year. Understand what you want to do with the money. Are there any further questions? Nothing more. We're going to have a short break quickly. Thank you, Sydney. I appreciate it. We're going into a small break now, and thereafter the attorneys are going to baffle you with how much work we actually do after, behind the scenes, once a liability claim is submitted through to us. So get ready for it, get hyped up and coffeed up and teed up, and we will see you very shortly. And to our Zoom listeners, we will start at 12 o'clock. Thank you very much. everybody, we've got 3 minutes, 2 minutes, 59 seconds, and counting. Tick, tock, tick, tock. Run, Forrest, run. So please settle down, have something to eat, and drink, and have fun. We are starting soon. After this one, we're going to have a nice long lunch break. We're going to have an hour-and-a-half lunch break, so we can really mingle, say hello, and make sure that you eat enough. We're going to, if nothing else, we would have feed you today. And make sure that we send you home with a full stomach. No, but they need to fall asleep, because then we're going to talk about new product changes, so that they don't listen. Yeah. Oh, you didn't listen to that exclusion. All right, so a nice hour-and-a-half lunch. I can't give you wine during the lunch. It's a liability, blah, blah, blah issue. But thereafter, once we have wrapped, there's an open bar. And you are so welcome to join me. And then we can reminisce about claims and how life is going to be for us in 2022. So please, you don't need to rush home. We're going to figure out, there are 2 bars, and it depends on the weather where we're going to meet up. But you are all very welcome to join me. If you are drunk, I will phone Uber, because I'm responsible. Or I'll book you into the hotel. Any other options? Am I missing something? All right, so Lizelle is going to speak to you now about all the legalities and really what happens afterwards. So have lots of fun. You've got a minute. Is everybody seated? Gaan julle al twee voor staan? Okay. Te langs terug. Okay, is everybody seated? We're going to start in a second.
Right. Yes, we'll chat. Hi everyone, how are you? I'm Liesel van Deventer. I am one of the directors at KEU Underwriting, and this is my lovely associate, Michelle. So thank you for taking the time to listen to us today. I know there's a lot of attorney jokes going around, but I thought I'd make the following one just to get us started. And it goes a little something like this. What did the broker say to Adam and Eve? Well, clearly you need some coverage. So on that note, there's a couple of things we want to discuss with you today. The first one is the role of the broker in the litigation process. Now, I don't think that attorneys and brokers, our paths often cross, but as it happens, it actually does. And Michelle is going to chat to you about this. And then we're going to talk a little bit about quantum and legal fees, and then we are going to do a little poll and discuss the latest legal trends. So on that note, I am going to give over to Michelle Engelbrecht. And by the way, this is what she does. This is absolutely our passion, insurance. So we welcome any questions that you guys have. Thank you for giving us the time. Right.
Thank you. All right, so I'm going to start off with the brokers. Obviously, the most important role that they play, they are the contact person between the underwriter and the insured. Okay. Most common issues that we experience with this is that sometimes the insured is unaware of its obligations in some instances in terms of the policy, or other times they don't even know the exact terms of their policy. Okay, we had an insured that was concerned that he was going to pay 10% of the eventual quantum, because that's what his policy says. Okay, we had to refer him back to the policy and say, relax, everything's under control. KEU's taking care of that part. You know, the excess that is payable, that is where it becomes very important. Okay, sometimes we are almost at the end of the litigation process, or summons has been served and we are already thoroughly busy with the discovery process. and we find out that the insured still hasn't paid his excess, but he doesn't even know he had to pay an excess. Now, we are aware that some insureds will take that chance to allege that, oh, we didn't know. Obviously, we all know an excess is payable if you take out an insurance policy, but they will play that card and they will milk it for what it's worth. All right. So that's where the broker's role starts, gaining weight. In other words, you need to make sure, one, they know exactly once a claim is lodged with the with KEU or the underwriter, that they know there is a excess that will be payable. Firstly, the invoice needs to be sent to them. Okay, the details need to be accurate. They need to follow up. So their job doesn't stop if they've now informed them that an excess is payable. All right, they actually have to follow up. They have to ensure that it's paid. And if they do struggle with that, because it does happen, not everyone is as forthcoming or cooperative as we would like them to be at times. But then you're more than welcome to let the attorneys know, or let KEU know so that they can let the attorneys know. And then we get involved. All right, just to ensure that that excess is paid. All right, can we move on?
See, I'm also now the assistant.
Feels nice.
Yes, so the roles are a bit reversed.
All right, so part of that also includes collecting documents. I'm going to make one example, use one example that I often experience difficulty with is a normal crash bash, a motor vehicle accident. Okay, by the time that the claim lands on our desk, there's obviously some details and information that we require. One of the most important things that I find we struggle with is the plain and simple accident report. Okay, there's a claim form that's submitted to your insurer, okay, to say, okay, I've been in this accident, please pay out. That normally happens very quickly. Okay, the follow-up with getting the supporting documents is almost impossible at times. Okay, I see a lot of you nodding. I like that.
The guilty ones know.
All right, so on that accident report note, the claim form is informative and we can work with that and we can start getting the process going. However, if we stand in a court and we need to prove the facts that we are alleging on the papers, the accident report is actually the legal document that the court will accept. Because in my claim form, I will just say anything so that my insurer pays out. I wasn't negligent, I did brake, I didn't skip a robot. But an accident report, there's normally witnesses, at times mostly, there's two parties. So you can't contradict each other because you are standing there and you are completing it. All right. So in other words, if this happens, we need that accident report. We've recently had a matter where it's almost prescribed because, we're closing or nearing the 3-year period. And summons has still not been issued or served because we are waiting certain documents. Sure, we can draft the summons and amend it at a later stage, but we would like and prefer that the groundwork be done before this driver, for example, resigns and is no longer contactable, and we don't have that next of kin or that contact number, email address, physical address, and so forth. Okay, that's one of the documents. Driver's licenses, all of that. I don't know if I've covered everything.
Yeah, and then some of the other documents that we often see that we need is things like engineering certificates, those sorts of things. Remember, a claim prescribes usually within 3 years, and we're not going to get into the whole thing about the Prescription Act because that's a whole other seminar. But it is imperative that we have these things for the simple reason that it puts us in a position to start recovering funds or closing matters off. I know, and Denise knows this very well, and in some of these cases with some of the JVs that are formed for shooting of films and those sorts of things, if we don't have the necessary documents, KEU is not in a position to close the matter off. In some instances we're waiting for blood alcohol results, and I think it was this week that we had a matter where it was said, well, it was given to the wife of the insured. Now,
the deceased.
Yeah. Well, the deceased in this case. Pardon. So the problem is if there's a lack of communication between us and you, and remember, yes, we are the attorneys and people think we're very scary. We are, but we're also human beings. So if there's anything, you can always reach out to us, because the thing is, a chain is only as strong as the weakest link. And in the cases where certain of these information, we don't receive it timelessly, it creates big problems. And at the end of the day, like Michelle said, by the time that it lands on our desks, it's quite a hot potato. And then sometimes we have a month, a week to appoint tracers, get it served. And the important thing here is to remember that for us to stop prescription, and I know I'm going on and on about prescription, but it's a very important it's a very important matter. The issue that we then sit with is we have a week to get everything done, and in order for us to stop prescription, we need to serve and file. That means we need to obtain the address of the other person, make contact with correspondence, all those things within sometimes a week or 2 weeks. So, yeah.
Yeah. I think if I can just elaborate on the engineering certificate. In some instances, we find we've been provided with an engineering certificate, but it refers to a completely incorrect section, or the engineer just didn't know what he was doing and he certified something that doesn't even relate to that. Okay, so whenever the structure is erected, yes, it needs to be inspected and a certificate needs to be issued, but also just take that time to read the certificate and go to the relevant section in the Act to see whether it is in fact the correct one. Again, if you are uncertain, contact us, send it to us, send a copy and ask us, quickly confirm if this is sufficient and if it will hold up in court, basically. All right. A part of that is, I know once it's erected, it needs to be inspected. That doesn't necessarily mean every year there needs to be a new inspection, but if there are alterations to it, then you need to re-inspect it. All right, so whenever you alter the object that was initially inspected, a new certificate needs to be issued. And you're more than welcome to again send it to us and say, okay, alterations took place, here it is, please confirm if it's sufficient. All right. There we go.
All right.
Thank you.
Thank you so much. All right. The next thing we want to have a chat about is policy limits and legal fees. Now, I don't want to bore you with legal fees because we're attorneys and we find it quite boring, so I thought I'd rather leave some of that out. But the thing that is very interesting, though, is the part that pertains to quantum. So just on legal fees, it's important to understand what legal fees actually mean. It's at the end of the day, at the end of the trial, if the matter, when the matter has become settled or somebody has been awarded something, we then deal with the legal fees. That's what we call the tax cost. That's what hopefully we will get back at the end of the litigious process. So there's that, and then there's quantum. Now, in awarding damages, the court determines, when we look at damages, we look at what was the position of the person before they were injured, or for purposes of today, I'm going to deal more with personal injuries, because in our practice, that's what we deal mostly with. Crash bashes we do have, but that's kind of the oddball. All right, so when we look at awarding damages, the court looks at specifically what is the position that the person was in prior to an accident occurring, and what is the position now? And then we look at the difference between those things, and the purpose is to put the person in the same position that they would have been if the accident, for instance, did not occur. Now, victims can claim special damages and general damages, and we want to chat a bit about that too. And obviously at the end, you guys are welcome to ask some questions. Now, general damages, I think the word general is quite misleading. It's not actually easily quantified. Damages, general damages are things like pain and suffering, emotional shock and trauma, disfigurement, loss of amenities of life. It's difficult to put a rand value on these things because of the fact that, you know, it's one thing if you're a surgeon and you lost a hand, you made 200,000 rand a month, you cannot generate that income. That's something different. But general damages, as a rule of thumb, is quite difficult to calculate. Now, the question then becomes, well, how do we calculate it? Now, again, that's a whole another story all on its own, but some of the things that the courts look at is the age of the person, sexual orientation, occupation. Like I said, there's a difference between a professional cyclist and a surgeon versus a teacher or someone that occupies an administrative position. They also look at things like cultural differences and lifestyle, and then obviously the nature and the extent of the injury that was suffered. Now, it's interesting, just as an example, if you are in a coma, you can't really claim for things like you know, trauma, for example, because if I'm in a coma, I don't know that I'm in a coma, so I can't suffer the damage. It's one of those weird anomalies, but I find it quite interesting. I pressed the button. All right. Now, special damages, again, I think it should be switched around because these are quite easily calculated. This is something like medical costs, loss of income, cost of repairs. It's something that we can easily quantify. Give me a voucher, medical vouchers, expenses from the medical aid, salary advices, those sorts of things. So this we can easily quantify, and you'll see in a moment why this is quite relevant. Now this is the thing, I think this is the main part of our discussion today, and Michelle, you're welcome to chime in if you have something to add. We want to talk a little bit about the legal developments that we have in especially personal injury claims. And the reason for this is there's been quite a lot of movement, especially from the Supreme Court of Appeal in the last couple of months and years. So, but before we do that, I know you guys specialize in insurance and we in law, so I think we just need to create like a little bit of a baseline. Now, when there's an injury, when property is destroyed, those sorts of things, it falls within the ambit of what we call a delict. All right. In America, you probably would have heard the word tort before. That is what they have in American law. So it's like a distant cousin of the tort. Now, it consists of 5 elements, and we'll chat about each one in brief. It's obviously an act. Something needs to happen. And the interesting thing is also, we get a lot of questions about this, especially from clients. An act is also an omission. So if I don't do something when I'm supposed to do it, then it also qualifies as an act. So just before I go in, apologies for interrupting myself, in order to be successful with a delictual claim, the one important thing that you can never surpass is the fact that we need to prove all 5 elements of the delict in order for a claimant to be successful with a delictual claim. All right, now the other part is the wrongfulness. Now, we were having a discussion about this morning. In one of our cases, we're also dealing with this. When we deal with wrongfulness, the question becomes, did I have a legal duty to do something? Now, that's quite a loaded question. And it boils down to the fact, well, for instance, if someone's swimming in a river and I can see that the person is drowning, I'm a lifeguard, obviously there is a positive duty on me to do something. I have an obligation to save this person's life. Same with a doctor, those sorts of things. So if I don't do it, wrongfulness then comes into play. Then we have fault, and that consists of 2 arms. And if you watch the Oscar Pistorius trial, you will know it's dualis eventualis and all those things. Everyone was an expert on that a few years ago. But it basically boils down to negligence and then intent. All right. And we're going to look at those 2 in a bit. Then causation, also very, very interesting. Causation is, I always say it's like a long chain. Something happened, can I be held responsible for this? By the way, I see these are very nicely stuck to the ground. I approve. I'm sure Sydney also approves of everything that's going on here. Yes. So causation is if I break a leg and I tripped over this. You agree with me, it's easy to understand that the cause of the injury was because of the wire that I tripped over. So that is what causation deals with. And it becomes very involved. There's case law about people being involved in accidents and then they're picked up by the ambulance, and then the attendant in the ambulance then forgets to close the door of the ambulance. Yes, this really happened. This is South Africa. And then the guy is strapped to the hospital bed. They start driving to the hospital, and choop, there goes the hospital bed, or the bed, and it falls out. So now the question with causation becomes, who is responsible for what damage? So you can see that becomes a very intricate thing in the sense of let's say the fracture to the guy's leg was because of, for instance, the vehicle accident that occurred, but the damage that ensued after that was as a result of the fact that the doors of the ambulance were not closed. So that's a little bit about causation. And then obviously damages, we have discussed that, which we then have the two branches, the general and the special damages. And Michelle, correct me if I'm wrong, but sometimes we get these questions. I get a lot of interesting cases. I do about like 700 consultations here, sometimes more, it depends. And we sometimes see people that come in and say, you know what, someone said something about me, I want to sue them for defamation, which is then obviously general damages. And the figures that they throw around is quite interesting. But the long and short of that is the damages at the end of the day for general damages, it's not a lot. This is not America. This is what I always say to people. General damages in our law, especially for those sorts of things, it's really minimal, and it really is on a sliding scale. And to determine that, we look at case law. So in previous matters, similar facts, what did the court find? All right. Okay, that one we have discussed. Okay, now let's get into the nuts and bolts of it. I'm just checking my time. I know I'm a very tight schedule. All right. So when we look at the test for negligence, obviously I don't think we really need to discuss when someone has the intention to harm another person, because, I mean, I think that's just obvious. But negligence is sort of a different creature. When we want to determine whether someone is... Let me just put mine on silent, just whilst we are at it. All right. So, culpa, which is just a fancy name for negligence, or this arises when someone in my position, or no, put differently, we call it the reasonable person test. If the reasonable person would have foreseen, and guys, this is really the takeaway, the foreseen bit, and we'll circle back to that in a bit. If a reasonable person would have foreseen that his omission or act would cause harm to another person, whether it be, you know, like a crash bash or whatever the case may be, and he would have taken steps to guard against that, and you don't do that, then you are negligent. So, put differently, if the reasonable person in your position would have done something differently and you did not do that. Now, this is something that we find in the Kriya versus Kutsia case. I have no doubt that no one in this room will read it, because it's a very old case, but the issues are very, or what the court outlined there is a very crisp issue. I foresaw something, I knew that it could cause harm, I didn't do anything. That's the test. Now, a little bit more about this test, because if you just remember this today, that is the takeaway when you deal with your clients, with the insureds, those sorts of things. Because when we know what to look for, it's much easier to preempt certain things and to get certain measures in place. All right. Now, let me just move on. Okay. I'm sure everyone knows about the matter that made Pick n Pay famous for all the wrong reasons. Now, this is where, if you recall correctly, I said in the beginning that I want to do a little bit of a poll. Now, by show of hands, who has actually, and by the way, we included a link there for you. I'm sure this will be made available. Okay, perfect. So, I'm going to chat a little bit about the Supreme Court of Appeal case. Now, by show of hands, who knows about this case? Ladies and gentlemen, I'm shocked. I am shocked. Okay, well, this is why we have these discussions now. Okay, all right. Okay, so I'm not going to stick to the slides in detail. I don't like to read off. I like to engage more with people. So basically what the matter pertains to is there is a Pick n Pay in Durban, and at this Pick n Pay there is a boom. You know, we all know these boom gates that you enter with your car, and this controls the exit of the vehicles from the parking area. All right. The respondent, certain Miss Pillay, was struck on her head by this boom as it descended from a vertical position. So for a moment, let's just create some context. This is, we all know, Pick and Pay, Checkers, those sorts of things, where I drive in with my vehicle, choop, the boom opens, I drive in my car, get out, do my shopping, come back, get in my car and go. Right. This boom hit her on the head and she suffered damages. You'll see later on they specify exactly what the damages were. Now, just as a little interesting poll, I know the two ladies in the front know the answer, and Sydney also as well, probably. So just by a show of hands, who thinks, oh, and by the way, this is a very important thing to add, she was on her phone, she was texting and walking, not looking where she was going, and the boom then fell on her head. Just by a show of hands, who thinks that Pick and Pay was responsible for the damages that she suffered? We have one brave man in the audience. So only one person says that Pick and Pay. Two, all right. Who says that she was liable, or she caused her own damages? See, the general feeling of the public is clear. Okay, fantastic. Who say both parties were guilty? All right, two. All right. Okay. In the question and answer session, I'd like to know why you say that, but for the time being, I'll go on. All right. So, like I said briefly, the boom consists of a 3-meter aluminium pole painted in white and red. Everyone can see it, unless you're colorblind. The pole weighs about 2.4 kilometers, kgs, so it's rather light. Then there's this mechanism it's also nice and bright, which then operates this. It's located on a sidewalk, and directly adjacent to that, there's then a pedestrian sidewalk. Okay, so there's bollards as well, all these interesting things. All right. Let me just move on. Now, yeah, this dates back to 2015, just as a matter of interest. On the 10th of December, she and her colleague, Miss Geraldine, they were walking, going to the car, they did their shopping, she was on her phone. She did not see the boom. It descended and struck her and the other lady as well. She was hospitalized on 2 occasions, apparently, and she was diagnosed as suffering from moderate concussion and sustained a sprain injury to her cervical spine. Now, apparently she had to undergo physiotherapy and pain medication and the whole story. Apparently she continues to then suffer these episodes. Right. As the story goes, and this is a shock to no one, she instituted proceedings against the defendant in the Durban Match Court. Right. She alleged that the incident was caused by the sole negligence of the defendant. The asserted grounds were as follows. The boom was positioned immediately adjacent to a popular pedestrian walkway, and what the court then said is, no, lady, you should have reasonably, or what she said rather is, the defendant said that you should have seen this, and you should have done something, you caused your own harm. Now, by the way, if I can just quickly go back one slide. Okay, no, it's the next one. Now this is where it really gets interesting, and this is the gist on which the matter turns. The defendant said, okay, I hear you, but we did what's reasonable. And there was no other issues, no other obstacles or hazards which would render it unsafe to the public. There was a lot of things said. They also said, listen, yes, but there's this lovely board that says enter at own risk. So, like I said, the case is available. I want to talk more about the principle. So at the bottom there you'll see where it says, well, the defense was based on, there were prominent notices informing the public that they enter at own risk. And for a long time this was what the law said. You know, if I put a notice up to say, well, enter at own risk, and you then enter the premises, the understanding is that there is a tacit or implied agreement that you agree to those terms. Right. Now, the magistrate court did not agree with this. She said, firstly, she failed to prove her injuries and negligence on the part of the defendant. Then, as the story goes, it was then referred to the KZN High Court, and this is where we circle back to what we see in the Kruger versus Coetzee matter, where they say, well, the risk of harm presented by the boom was reasonably foreseeable. Shoppers could be struck by the boom, which has an automatic and unexpected descent. The plaintiff was inattentive, so had she just observed her surroundings, she could have avoided the injury. And then what happened is this very interesting thing that we call apportionment of damages. Because in our law, the interesting thing that you see is I only need to prove 1% of negligence on the part of the defendant to be successful with my claim. So that's on what we call the merit of the matter, and then we deal with the quantum. So it's a question of, were you negligent, yes or no? The moment that we answer the question yes, now we need to start doing the figures of, all right, what is the percentage where the percentage of negligence? Now this is really, it's one of those thumbsuck things, and it's actually determined by then leading oral evidence usually. Now, in the High Court matter, they awarded her 60% of the amount that she claimed. I can't recall what the amount was, but it was quite hefty. So they said, well, she was only 40% negligent because she wasn't looking where she was going, and the other 60% of the blame then lays with the defendant for putting up a boom and not making sure. Now, it's easy to get angry with the SCA, as we as attorneys sometimes do, because there's a lot of things that they do that we don't necessarily agree with. But the important thing is, and there's a reason why I don't mention it here, is when I speak to people about this case, they get very upset because they say, no. The SCA was completely wrong. The Supreme Court of Appeal, when they made this judgment. But here's the thing. A few months before this, and I think it was about 2 months, another lady walked on the same walkway and her glasses fell off her face when this boom came down. So this is where it becomes problematic, because now the court says, okay, and remember, they take an armchair approach, right or wrong, ex post facto view, you should have 1, 2, 3, 4, 5, you didn't, you're liable for this. All right. But the fact of the matter is, when that person's glasses were broken by this boom, it was brought to their attention that there is a problem. Now, they then decided to put up these boards to say caution, boom, overhead, automatic boom, and all the rest of that. But this particular incident happened before those signs were erected. And this is where the crux of it really lies. Because, again, going back to the test for negligence, you should have reasonably, and again, that's a very wide topic, foreseen that something could have happened. You didn't do anything to cater for that, and hence negligence was then established. So this is why the court found in their favor. People kind of scan over the judgment and they omit to read that very, very important part of the judgment. And that's why the court at the end of the day said that this is the situation, and they agreed with what the High Court had said. And we're going to talk about a bit about, well, what does this mean for the insurance industry as a whole? Because obviously this is a business and we all want to make money. So, because the thing for me that comes to mind, you know, not necessarily as an attorney, but as a lay person, is thinking, okay, but do I literally need to think for every single person in this room? And the short answer is yes. When assessing negligence, okay, let me just go to the next slide. The focus appears to have shifted from foreseeability and preventability. formulation of the test to the actual standard. That was usually, yeah, you should have done this, but this is now the standard. This is now the test by which the insured will be measured. And this is just a little extract that I took from LOSA, which is the Kruger versus Coetzee test, or any modification thereof, has been relegated to a formula or guide that does not require strict adherence, so it becomes a very, very fluid test. This is that what I refer to as the armchair approach. It's merely a method for determining the reasonable person standard. This is why courts are free to assume foreseeability and focus on whether the defendant took the appropriate steps that were expected of him or her. Okay, so just an interesting thing when we deal with and we were actually discussing this morning. The reasonable person, when you go and look at what the reasonable person is, the reasonable person knows his area. He knows the road that he drives every day to school. For instance, there's a case where a man killed a small child at a pedestrian crossing, but he had been living in the neighborhood for many, many years, and he said, well, I didn't know that there's a school. Now, obviously, the reasonable person test then says, well, the reasonable person is aware of his circumstances, the reasonable person observes what's going on around him, it's cultural based, it's a very, very wide test. And the reasonable person in India, for example, wouldn't act the same as the reasonable person in South Africa. So it's really about how the courts kind of interpret these things. All right, now, what does this mean for us? How is this case relevant to you? Obviously, like I said, this is a business. From my point of view, and we've had long discussions about this, is it's becoming a sort of a situation where the moment that someone knows that there is public liability insurance, or in fact any insurance of any kind, they will institute a claim just for what we refer to as nuisance value. I don't have a claim. Technically, it's my fault. But there's insurance, so the misconception is that the insurers have deep pockets, and sometimes they do, but that does not necessarily entitle you as the claimant to payment, right? So the emerging trend is really that, and this is what we see. Remember, we study case law every day. If you created the risk, you are responsible to do everything, and when I say you, I'm referring to the insured, of course, to prevent injury. Now, one of the other things where I feel personally that the defendant's attorneys made a mistake in the SCA matter is they said, yes, yeah, sure, we agree that technically the boom could fall on someone, but the odds of that happening is negligible. So that means that, yes, they foresaw that there could be an injury, but they chose to ignore the risk because of it's not something that's likely to happen. And quite frankly, it's the first time I've ever heard of it. So now, as I was saying, the fact that this is highly unlikely, or what we refer to in law as de minimis, this does not exonerate the insured in any shape or form. I always say to people, when you deal with delictual claims, especially negligence, think of the caution contentot, which is a famous American case, Liebeck versus McDonald's restaurants in 1994, this matter. It's an old matter. It pertained to a lady that sued McDonald's because the content, I'm sure everyone knows about this case. I see your heads nodding, where she bought a cup of coffee and she burned her mouth. I don't know whether it was quite badly, but the long and short of the matter is she was successful with the claim against McDonald's because they didn't warn her that the coffee was hot. Now, it's one of those things, we can debate this the whole day. So that's basically where we are moving. You, as the insured, are expected to do everything within your power. Does not matter how big or small the risk is, if you create the risk, you are responsible for mitigating that. Okay. All right. Now, Michelle and I took a field trip it was about 3 weeks ago to yeah. And this is one of the matters that we are working with. So I really want to use this as an example to illustrate to really bring it home and tie everything together in a nice little package. Okay, so I don't know who here has children and let them jump on these jumping pillows. It's quite like a new thing. So what happened here is we did an inspection in loco, which means we go to the premises to actually go and look at what happened, chat to a few people. It was raining on a particular day, and a child got onto this jumping pillow, was jumping, and apparently, or the allegation is that he injured or shattered his T12 vertebrae. The jury's still out on what exactly happened. Now, just for interest's sake, these sorts of injuries can range up to about 4 million rand, depending on the age, again, the social status, those sorts of things. Now, just some other things to look at is the pillow is situated next to a swimming pool. Now, you can't really see it from the pictures, but on here it says, do not get on this thing when it's wet, do not jump with shoes, all those sorts of things. So there, the insured complied, but it was situated next to a swimming pool. Oh, and by the way, I think it's no children under 16, right?
Yes.
Yeah, okay. It wasn't fenced, there's no attendants, all the attendants were alternating between the slide and the pillow. The insured agreed that the pillow could be dangerous when wet. Now, if we just stop for a moment and think back to what I just chatted about with the SEA case, now you start seeing, because there they said, yes, no, technically the boom could fall on someone's head, but really what are the odds? So they agreed that it could be dangerous when wet. Now, the incident report was filed because the injury was really viewed as negligible. It's not really serious. The problem then came that by the time this matter landed on our desk, we were running to and fro because no one could actually recall the incident. And it's something that apparently happens quite often, you know, someone sprains an ankle or gets hurt. And then we had to look into this claim. Okay, now, we did some fun tests of our own. Sometimes attorneys are allowed to have a little bit of fun. And I think we still took like a bucket of water, right?
Bucket, yes.
Yes. And we threw it on the jumping pillow. And then we grabbed someone there and said, jump.
So we didn't jump.
Yeah. Yes. Yeah. We don't need our legs, but we do need our arms and our minds. So, a bad joke. So, no surprise, the guy literally jumped once or twice, and he literally fell so hard that he suffered whiplash. And it was it was about our length. Yeah, his eyes were this big, and everyone was going, okay, well, we didn't expect that. So, ex post facto, looking back, armchair approach. Hindsight is 20/20 vision. All right. This pillow should be fenced, and there should be a gate around it, because the thing is, the kiddies who are using this, the customer, is small children. I've never seen a small child, maybe other people's children. I've never seen a small child stop and go, let me first read the rules. And yes, Donnie, we can't do this because it says you can't jump when you're wet. Let's go. The customer is a child, or the user of the equipment. They will jump on it. It's situated right next to a pool, for heaven's sake. The children get out and then go and jump. So the attendant should monitor the children. There should have been someone that should have been there to deflate the pillow, because you can't jump on it when it's deflated. And the other interesting thing that came to mind, Denise is hearing this for the first time. We haven't even discussed this. I see her going, really? The other thing is they said, well, they turn off the super tubes when it's raining. And I found this quite curious because you're already wet. But that left there. So they stop people from using the other equipment, which has to do with water. Yes, I understand lightning and all those things, but this they just left. So looking at the case that we discussed and this matter, which is a real instance, can you see the correlation between these sorts of things? And I understand you guys as the brokers are not really at the fiery end of that. That's more us and Sydney and our ladies over here, but it's important to drive the principle home so that when you engage with the insureds, because you guys are the contact point, I mean, it's all about relationship, that these things can be conveyed to them. All right, yeah, that's the wet jumper. Whew, poor guy. I felt really bad. Proclaimant views. This is what we're seeing from courts. It's what I always refer to, people don't like it, but what I call the bleeding heart. Sis toch shame. He got hurt. These people have insurance, they have money. Why not just make them pay? Please don't tell the judges I said this, but this is really what we are seeing. The view is that the insured gained a financial advantage. You paid to use something, you attended a show, you were at an exhibition, you were on a TV program, and there was some sort of quid pro quo. So I have the advantage as the insured, and now the poor person is injured, he's out of pocket. Usually then you find out they really have no money, and that just fuels it so much more. And this brings us back to insureds becoming increasingly burdened with this onerous task of literally thinking of everything. We had a meeting with the insured yesterday, and literally the question that came to us is, how am I supposed to conduct my business? Because it becomes an issue of the moment that something happens, someone's going to take an armchair approach and say, well, you should have done this, this, and this, and this, and obviously we can't time travel, so we're stuck with the consequences of these things. Well, this was the answer. There is no right and wrong answer, but the thing is, it's important for us in this industry, in order to, I mean, we've had many discussions about this, where it becomes one of those things, you're starting to think, well, how is the insurance industry going to remain relevant? Because the thing is, if insurance becomes too expensive, people will just internalize the risk. They'd rather say, oh, well, I'll just take the chance, maybe something's going to happen. Okay, I see I'm getting the eye. Okay, so the important thing for us to do is to sit and think, what would I do if this, and this happens? And this ties in with continuous compliance, updating policies, and quality risk assessment. So, and then obviously stricter exclusions, but I'm sure the insureds don't want to hear this. So I thought I'd end off with a little bit of humor. Ties in with the case that we discussed earlier. It says, warning, coffee can cause severe burns. Not responsible for loose-fitting lids. Coffee stains can be permanent. 2 cups limit recommended. Do not drink coffee while driving. Decaffeinated coffee may contain slight amounts of caffeine. So this is kind of what it boils down to. Questions?
Thank you. I think we've got quite a few. I'm going to first ask the audience. Justice, you've got a question for us. Okay. Can we have a mic for Justice, please? I'm going to quickly stand on this side. I think the 5 points that you need to talk about being negligence as well, the next one.
Mm-hmm.
Not that one. Okay, Justice.
Sorry, I have a couple of questions about the case
A couple?
study. Well,
Oh,
it's three. It's three.
I'll give you my business card quickly.
Yes, we have many.
It's quick. Three quick questions. First question is, for that particular one, would there be a disclaimer at check-in? And would that disclaimer require that a parent, how old is the child?
12. The child is 12.
Okay. Would there be an age limit on which children should be monitored or supervised?
Let me answer that with a very brief statement. when I'm sure everyone here remembers their 18th birthday, or for some of the older folks, 21.
All set, yes?
Thank you.
Not giving away any ages here. All right. As long as you are a minor, meaning until even the day before you turn 18, your parents have a responsibility to take care of you. And what you're referring to is what we call lack of parental control. We are currently busy with a case where a child was on a quad bike, and the argument is, well, you should have accompanied her, or you should have been there watching over her, those sorts of things. So with checkers and all those things, really, if you start paying attention to these things, you'll see that they are everywhere, these disclaimers. And by the way, I just want to add something there. It's very, very important to remember two things. In our law, firstly, you can exclude negligence. That's what those boards aim to do. Okay? But I can never exclude gross negligence. 10 points for Sydney. So, yes, you can never exclude gross negligence, which kind of borders on intent. Yeah.
So in other words, it was wet, they should have closed the pillow.
Yeah, okay.
Yeah.
Duty lies with the insured.
But now, as much as the duty lies with the insured, in the similar case that we looked at, there was some responsibility laid onto the claimant or the plaintiff.
Yep.
So is that kind of the approach now? Are we trying to mitigate the claim, or get the judges to move in that direction to say, well, you as parents had a responsibility too,
yes,
your child, to make sure that your child is safe. And this child's now out in the rain, first of all, and secondly, they're on something they shouldn't be on.
Yeah, but you see, the thing is, this was what the parents said. Okay, we come to a resort. I don't literally walk with my child to every single, and I'm not saying I agree with this, because I don't. If you ask me personally, I have a fundamental issue with especially the apportionment of the damages that the Supreme Court of Appeal awarded. I feel that it's a bit steep to say that Pick n Pay was 60% negligent. But to answer your question, is every single matter is evaluated on the merits of that specific instance. So it depends on so many factors. Where, is it somewhere where the mother could be, like, for instance, on if I take the quad bike as an example, I could stand next to the park, but the child is driving and is going around the corner. It's not like I can see. Whether I was there or not, it wouldn't really make a difference. I should have not allowed the child to get on the quad bike in the first place, or I should have been with the child. So it really is, I understand, and these are the things that perplex us and interest us, and that's why we're lawyers, because we devote our lives to studying exactly this question that you just asked. So it's not a black and white answer. There's many factors that the court takes into account. For example, if it's a volenti non fitinuria, if, like, you go bungee jumping, you agreed that there's some sort of risk. So it depends on the facts of each matter.
Yeah. Just on that quad bike case, the allegation was made, no one told me how to operate it. But she was driving on it, and the mom was there when she said, well, get on it, let's go. All right.
Yeah.
She had consent from her mother. She was 17 years, 360 days or something.
Just a few short.
18. Just not 18 years. So definitely when we work with children, obviously when we rate it and when we do the risk, we are far more strict.
Yeah.
Because we know these things go along. Parents have a duty to look after their own children.
And they don't.
No. And especially if they start drinking.
Yes.
And then they lose them. And then tragic things happen with children. But there was a very specific case where that was ruled. It was on a matter where a child drowned at somebody's house, at a friend's house. And the court said the parents are the sole responsible party for a child, especially a minor. So we are strict in terms of disclaimers. It does not prevent claims from happening. It highlights the risk. It says, do not jump because it's wet. And as they said, a 5-year-old's not going to read it. 5-year-old don't care.
They don't care.
Most adults don't care. But you've got a duty to look after your children and minors. The same way our insured needs to make sure that it's all done correctly. We have some questions that's coming in, but I think we will answer that, it's a bit of an overview in terms of liability and film. Both Michelle and Lizelle is joining us for lunch. It's like a free hour of legal service. You can now...
Yes.
That's it. This is your chance.
Yes, you have two attorneys for an
For the
hour.
price of one.
Come chat to us.
They said that if we feed them, they are quite happy to talk to you.
We'll work for food.
After 2020, we will also work for food.
Absolutely, I think everyone will.
So we're going to log off. So our Zoom viewers, thank you very much for joining us. We're going to log off now for lunch. Please stay with us. Please mingle with us. Please come and have a bite with us. And then we will see you all back at 2 o'clock on the dot. At 2 o'clock on the dot, we'll be back, and then Zoom starts again. So please, let's have a word, a chat, a drink, non-alcoholic drink. But let's have
we still need to go and work after this.
Thank you.
Thank you.
Thank you.
Geef maar gewoon low five. Ah, well done.
Good afternoon, everybody. Thank you. Thanks for, again, thank you for coming back. I'm always so surprised after lunch people come back. Thank you. So this is the last session. You're welcome to sleep, but notes will be taken and rates will be adjusted accordingly if we see you again. So Yola and I will be doing this last little bit, and this is just all internal KEU changes, product changes, and how we see life panning out. So I told you right at the beginning in 2019, I thought I knew a lot. I now know that I don't. But we are now repositioning, reworking, and relooking at life a little bit differently. And our entire aim is to make life so much easier for you as the broker, so that the service back to our insured is immaculate, and so that we can all make money. What's the joy in all of this if we don't make money? So thank you again to all the Zoom viewers that's joining us. Last 45 minutes, last session, we have some questions from the previous session. And I'm just very quickly going to look at two of it. So the one question was, what is the value in signing an indemnity form when participating in an event or an activity? An indemnity form doesn't prevent a claim from happening. An indemnity form is there to highlight the risk and to make sure that you, as the individual, understands that you are now going to enter into a high-risk activity. So it highlights things like, do not do bungee jumping if you've got a weak back, or don't do parachuting if you're afraid of heights, basic stuff. So it is the duty of the insured to make sure the total risk is then presented to the individual, and therefore an indemnity is very important. Do we agree that there's now an increase in demands from plaintiffs? Most 100% yes. We see this across all lines. We see that even in the standard repudiation, that people feel that they have been done in. But from a legal point of view, yes, definitely both on the film and on the event side. If the minor child under 18 years went ahead without the permission of his or her parents, are the parents still liable? Yes. We cannot deal with a underage person. We don't deem them as mentally capable of thinking for themselves. Always the parent's responsibility. Parent needs to know where their children are at all times. And that responsibility falls over to the parent. Okay, so the last section that we're going to talk about is, so now we've read about all the claims that we've paid and the stresses that we've been through and all the red wines that I've consumed personally and on my own. Now what? So now it's 2022. Nothing much has changed, actually, looking back after all of that. So we are still underwriting all our classes of business. Nothing has changed in terms of our product offering. Unlike some of the international companies that has withdrawn from the South African market, and it makes sense in some regards where you've got a big international underwriter and having selective risks only in South Africa. It's not a big film and entertainment market as it is. If you then have an international playing in the local market with international rates and the cover extended, then they do get burned quite heavily and quickly. Obviously, there's a complete and utter communicable disease exclusion. No, we don't have it. No, I can't get it. The international markets in the UK was one of the first, had the help of their government that said that they would put a COVID scheme together for both film and events. And that happened fairly quickly. And we desperately tried to follow suit to see how we can actually institute that back into the South African market. And we were at the time just focusing on film. We couldn't even get the London underwriters to review what we have requested them to do so in the first instance. Obviously, after the riots and strikes, South Africa fell off the bandwagon completely. Government to some people might be surprised, did not jump at the opportunity to help the film and entertainment market. I don't know at the time that they could understand what it is that we're trying to achieve. So the big issue always on the film side with communicable diseases, you've got an international, even a local broadcaster that's putting a whole lot of money into this. So you've got a budget of 80 million or 100 million. And how do you then cope and work with your communicable disease exclusion? As soon as something, or as soon as somebody is tested positive, this is right at the start, everything goes into isolation. You could have 2 weeks standstill time. Who's going to pick up those costs that runs in the millions? And it was really a problem. So some of the international markets have offered some limited cover at expensive premiums. So it is not always available. It's definitely not available in the South African market. Then we had a complete and utter cyber exclusion. But apart from those two exclusions across all classes, our film and CPI rates remained unaltered. We did not increase any of our rates. And our thinking at the time was that, unlike some of the other markets, we had a technically sound rate. And we didn't have to have a knee-jerk reaction and having to immediately start increasing that. Our excess structure remained unaltered. The equipment rates also remained absolutely unaltered. Obviously, that's a market that was not affected by COVID, cannot be affected by it other than some cancellations. And even the event rates, even with the losses that we've suffered, remained unaltered, other than riot and strike. And riot and strike is going to be continuously becoming an issue for us. There were some reports out last week and the week before that they're expecting more riots and strike. We are dealing with an unstable economy. Our job loss rate is way too high. We have massive poverty. So we are not solving the problems that is going to make riot and strike go away. We know that the policing is not on top of it as well. Terrorism being an interesting one. We have many discussions about terrorism in the office. And there hasn't been an attempt recorded in South Africa other than the Tulsi brothers that were now found guilty. So they were now the first real court case, and I wonder how many people actually followed that. And after they've been in jail for about 3-4 years, actually what happened with that? And what is our actual rate in our exposure on it? So it is going to be for ongoing discussion, and then I need to get this thing to work. Okay, so what are we planning for the future? We are so close to finalizing and signing off on policy wordings. It goes through a massive number of people. And we are most definitely re-South Africanizing all our policy wordings. The riot and strike in terms of the film and commercial producers are further defined. Continuing hiring charges, which is a very standard sub-add to commercial producers, is now going to follow in terms of film producers. It might be for a rate, but it will be as an actual limit and not only a time period. Your prop sets and wardrobe inner limits, when you talk about antiques and furs and jewelry, has been increasing. The public liability under the CPI, the advertising liability, is now included in that, so it's a wider form of liability that you are providing. And the CPI nominated key cast and crew illness cover will now be provided without submission of a declaration of health. This will be for all productions up to a maximum of 5 million gross production cost. And we will follow the same rule that we did in terms of the film cancellation. So they have to have a 3-month clean bill of health and no pre-existing conditions are then provided. The event cancellation wording looks a whole lot different, and that should be going out fairly soon. That final sign-off has been provided, and I think we're going to provide that on our website anyway. So we will send it out if you want to, but all of these documents are from now on available on our website, so that everybody can get a hold of it. So there as well, terrorism has been, it's a wider cover because we don't have a time and a location limit, which we used to have previously. The right and strike follows the one that we had on the film, or vice versa. So remember, the right and strike provided is the inaccessibility to your location or venue as a result of right and strike. It's got nothing to do with SASRIO. We annually get dispensation from SASRIO. There's no physical damages to anything. It's the fact that people are rioting outside the Radisson down here and we can't get in here, and the loss as a result thereof. But nothing needs to be damaged here. The unavailability of the venue and the inaccessibility of the venue is also further defined and more clearly defined. Forced reduced attendance, which is a subsection that wasn't often provided, is now written back into the wording. And in very short, it says that if 50% or less of your attendees cannot attend, cannot get to your location, the event would be deemed cancelled. There's only ever been one event such as that happened in South Africa. It wasn't underwritten by us. It was when Sandton introduced the bike lanes in 2000 and something. And they then had partial road closures because the minister at the time said, get on your bicycle and we're going to have a green Sandton. So either walk or cycle to Sandton. Not thinking that there's a very big international convention at Sandton Convention Center, and people just couldn't get to the convention center because you had internationals without a bike, and they couldn't all walk. So that event was cancelled. That day was cancelled, and obviously it resulted in a lot of talks and fights so that this is stopped. The government travel ban. Now, it almost... I think, Yola, you will know that wording better. It says that...
Yes. So should there be a government travel ban, therefore South Africa closed their borders and no one can come into South Africa, that also can include the artists. So if you have, again, Justin Bieber that needs to come in to perform his show and he cannot do so because there's a government travel ban. However, there are two exclusions and we're trying not to test how this will be triggered, but if your proximate cause is COVID or communicable disease, that remains an exclusion. Or if your proximate cause is due to sanctions, so we decide to team up with Russia and that goes south for us, that's an exclusion.
All right, and then national mourning. The wording there has also been slightly refined, but it's your standard that you used to have in terms of film commercial producers and cancellation. So it's an actual day of mourning called, and then specific people are then noted in terms of that. Right, so those are the changes that you will see very shortly, but as I said, all the policy wordings will be available. All our proposal forms are available on the website. You can freely click around, and the same with all the claim forms. Everything is on there as well. Right, Yola is going to talk about you are talking about how we're going to help the broker and making life easier.
Yes.
There you are.
So after a turbulent 2 years, we decided to assist you a little bit more with the niche products. We know it's difficult to understand all the policies and the wordings and the conditions. So the way we are going to try and assist you is through an online, with the assistance of AC Develop, we are creating an online competency test, so you'll have your learning material on there, write a test, get a certificate, and the lovely thing of getting your certificate is you will then be able to access our online quoting system. Now this is all planned for activation on 1 March, and what the automatic quoting system will be is you'll answer about 4 to 5 questions and immediately receive a quoting indication or rating indication with your conditions and excesses all included. And that will assist you for those Friday late night queries where we might off be drinking or something more responsible with. The other thing that we will also assist with is monthly industry newsletters to keep you up to date of what is happening in the film and entertainment industry. For example, Tom Cruise filming in Henop's Hoedspruit, the other H, that one.
Far from the Henops.
Yeah. Yeah, yes. Okay. And I'm sure you've all heard enough about event cancellation, film cancellation, and liabilities. So just to give you a quick overview of the products that we do offer, the first being prize indemnity. And if you do not know already, this is indemnification insurance. So if you stand a chance to win a prize, and the key word there is chance, it cannot be guaranteed. Otherwise, it cannot be insured. Your rate will depend on the statistical odd of winning that actual prize, and thanks to Oak Tree's actuarial team, we've been helping brokers with weird and wonderful concepts. And I just spoke to one of the team members to say that in all honesty, I still don't understand one of the concepts, but luckily we have very smart people to do that for us. What prizes can be won? This can be anything from a cash prize to a physical prize, so whether it's a lawnmower or a Ferrari or a villa, it doesn't matter, it can be insured as long as the concept makes sense. Now, the only reason or the only way the prize can alter the conditions is if you have a car prize. You cannot give a car to a 13-year-old. You can, however, give him 100,000 Rand, which was one of our claims. I'm sure his parents loved him after that. The type of competitions that we do insure include your standard hole-in-ones, albatrosses that go for professionals as well as amateurs, throw the dice, pick a flag, guess the number of balls, all those kinds of things. What we do not insure is if the odds are too high or guaranteed, and for that reason, no tagged fish or biggest fish. We do include weighed fish if it breaks a South African or world record. So there needs to be a record and there needs to be a statistical odd we can attach to that risk. Okay, exhibitional risk. And I'm sure all of you know, for anyone that's going to go to the exhibition, the Baby Expos on 7th of April at Gallagher, I'll see you there. This is not cover for the event organizer, and this is not liability cover. This is the physical goods you exhibit at the exhibition. What the rate, of course, so that will be your total sum insured if everything got damaged, and the rate there will depend on what type of goods you are exhibiting. If I am exhibiting pillows in a high controlled safe venue, then my risk will be lower than you exhibiting cell phones in the CBD, for example. Of course, the period of insurance will also make a difference on rating. So whether you're insured for only a weekend, a year, that's going to make a difference. And then your security measures. We can include transport to and from, so from your shop to the exhibition hall and back. Equipment and dronal risk. And we have one of our brokers here that have challenged us quite nicely on some of the drone claims. But that is the way you learn. Yes, we insure drones for commercial use up to 20 kgs, including payload. And this is for commercial licensed drone pilots. So the drone operator must be licensed as well as the drone itself. Equipment, this is anything from your hiring companies to your freelancers, all that equipment, and that can include anything from cameras to OB vans to marquees. If it's in the entertainment industry and it's a physical equipment, then it can be insured. This is usually on an all-risk basis, which means it will be insured whilst you are using the equipment at location, whilst you are hiring it out, whilst it's in storage and transport to and from. You can take reduced cover at a reduced rate, but then understand the risk behind that. Additional covers that can be included is hire charges. For example, if our upstage team were supposed to be here today and something happened to their camera, then they can use that money to hire in additional equipment to at least finish the job and make sure that the event goes on. Escalation clause, absconsion, and liability can all be added in addition. Under the liability section, depending on what it is that you do and what your responsibilities is, the policy of the liability might be different. So if, for example, the only job you do is put up a camera at an organized production shoot, your liability is going to be slightly different than if you set up marquees at events. So then we would rather give you an event liability policy instead of an equipment liability policy. It depends on what the risk is. We also have some very exciting changes to come to the equipment all risk wording, and that will hopefully be signed off relatively soon. Then lastly, one of the biggest changes when it came to the year 2020 and to events was virtual events. The standard event liability and the event cancellation policy no longer was sufficient for the event organizer. They had new risk, for example, transmission failure, that we almost battled with a bit earlier, that needed to be addressed. They still had some of the original risk, but slightly different than the standard events liability. And this would include your liabilities, prop sets, wardrobe, equipment, and personal accident. Under your liabilities, it changed, of course. Your public have reduced, but your employer's liability have increased. You might have more freelancers, and you might be responsible for various props, sets, wardrobe, equipment. And then we received a question to say, okay, but what about the cyclist cycling from home? And the simple answer is, if you have an event, and it's a virtual event, you cannot be held liable for something that you cannot control. So if you're all sitting at home watching this from Zoom, which some of you are, and something you spill your coffee over yourself, I cannot be held liable for that. I'm not at your house making you coffee. That's a simple and clear answer to that one. Under the cancellation, we mixed our wording slightly when it came to events liability, events cancellation, and film cancellation all in one to make it slightly more relevant. And things like non-appearance of the speaker. If we were not to arrive and you decided you're so angry you're going to burn some porta potties, which actually did happen in one of our claims, then that became a real risk in some instances. Luckily, we're not seeing too much of that. If something were to happen to the equipment and now I can't continue the event, what is the financial impact of that? And then, of course, right and strike, as we mentioned earlier, that will always be a prominent risk in South Africa. And thank you for spending the day with us, everyone. I hope it was an informative discussion that we had, and you all will walk away with a little bit of more information.
All right, so we have some questions here from our Zoom viewers, so I think we're going to go start with that, if you've got any other to add. So the first thing that we asked our Zoom viewers is to say, what do you want to see improved? Shorter proposal forms, wider cover, or simpler wordings? And
all of the above.
And 52% of people responded with simpler wordings. And I'm hoping the next rollout that we are doing will be exactly that it will be a very simple South Africanized policy wording that's sending it out. Wider cover only got 34%, and then shorter proposal forms 14%. And I have to say, I know it's a pain to complete a proposal form. The problem is just the quality of information that we receive to provide a quote on is shocking. We have no idea what the event is about. We don't know what they're shooting. We don't know what the budget is. And then when we ask for storyboards and stuff, we then only find out that somebody will be hanging on the chandelier whilst a dog is chasing it and so forth.
Or jumping out of an airplane.
Yeah, and he's 83, but life is good. So we really do need information to do proper risk underwriting. So the next question was, will automatic quoting system be available to the brokers outside of South Africa, so our Namibian brokers?
Or Mauritian.
Or Mauritian brokers. So the AC developed scheme, maybe if we can go back to that screen quickly. So we've got products already online. It's starting to go on, it's on test at the moment, so it's going live, I think, within the next week.
Yes.
All right, so the broker portal that is facilitated by AC Develop, but it is linked to our website. Once you have written that exam, you've got 3 chances, and you pass that. You are then qualified to do an online quote request. It is only going to start with those classes, price indemnity, events liability, and equipment all risk, and then later on we'll see if we can roll that out. But those are in test at the moment, I think, with Sanlam, because we work via the Sanlam system to Santam via Centric into the system. It's a very
Yes, so all internal testing has been done through KEU, then went through Centric, and now it's back to Sanlam. It's quite a process. It takes about 2 years to get signed off by everyone.
So what I would suggest that you do is that if you are specifically working on events liability, if that's your major thing, write the product exam on AC Develop. Get that, and then you can get a good guidance on events liability. And there are many permutations. I'm sure, I mean, we have run some testing internally and externally on it. I'm sure that those permutations are going to consistently change. But something like price indemnity, we often have people that so urgently want a hole-in-one quote. The price indemnity product exam is like really, really easy peasy. So once you've written that, you can then get your hole-in-one quotes. I think it also speaks to Eagles.
No Eagles, so it includes
Only
hole-in-ones. And
okay.
then what's also nice is it has 3 other concepts. So guess the number of balls in the car, throw the dice, and pick a key, I think. So if you input your client's information in that, then immediately it will give you a rating and a concept as well for price indemnity.
So in short, just to answer that question, yes, it will be available to our international brokers as well. As soon as your AC Develop broker portal has been signed off, then you can proceed with that. And I think it would be a nice one to play around with. So that only gives you a quote. It still needs to be submitted to KEU. You don't have a binding authority once the quote has been submitted. We still need to review it and then sign it off. But what we are hoping to achieve is that it will at least give you a costing indication immediately. If a client phones you and says, I just need a budget figure to host the event X, Y, and Z, and then you can do that over weekends, because I know you all work over weekends. So, and every other night. So do that, and then on the Monday morning we can quickly sort it out for you. All the information is there. It's drop-down boxes. So we hope that we have made it incredibly super easy to work with that.
Just quickly, under the equipment all risk, that includes drones, marquees, office equipment. So it's quite broad.
Yeah, so it's all the product offerings that we have and the equipment all risk. Okay, but it will ask the question, are you licensed, and your ROC license, and your paid load, and all of that type of thing will be asked as well. And please, if you've got any feedback, positive or negative on that, please be in contact with us. Iola will be leaving us very shortly.
1 week left.
to look after her baby, so you would be dealing with me. But I will really and utterly try and solve all your issues for you. So please give us a shout if there's anything, speak to any of the other KEU staff, and we hope to be of assistance to you. So for the year going forward, I think our message is that we've now survived it. I think that we can say that we are over COVID. And 21 years later has been a hell of a ride. More good than bad. We've learned valuable life lessons. Would I have changed anything? Most definitely not. And thank you for all your support throughout all these years. Thank you for willing to be with us, both from a supplier side and from a broker side. Thank you very much. We appreciate all of you, all of our Zoom entrants. Thank you very much for all the brokers. I had a broker yesterday saying, will we do it in Cape Town? Most definitely next time it will be in Cape Town. So we miss traveling, we miss meeting you all and having nice lunches and drinks. So we are definitely doing that. Sorry, I just got another question quickly. A portable toilet bathroom trailer was hired in last minute and not insured under hired in vehicles. It rolled down a hill and was damaged. And damaged the building on the location. How would this claim be entertained? Public liability cover was in place, and the trailer hirer would not accept responsibility. So normally anything that is trailer-like follows the motor liability and is not standalone public liability. So your definition of what it is that is used on set follows your liability. If it is an item that that's not self-propelled but must be propelled by a secondary vehicle, it falls under motor. So I would just find out who has sent this through to us and I'll address that specifically. But it rolled down a hill and damaged a building, but I don't know if it rolled down a hill because the car made an accident. So I just need to get some clarity on that and we'll talk about that. Just maybe if what we should answer on the film set, a whole lot of equipment, portable equipment, even if it's stationary, then the liability from that is standard public liability. Self-propelled obviously is motor, but I will just see who's sent this to me and then we'll address that specifically. Are there any other questions? All done. Thank you very much. Thank you to all our Zoom viewers. We really appreciate your time. Everything will be recorded and edited and will be available on our website. So you can even go in just into the little snippets to listen to what Lizelle has been saying or Sydney. If you've got any other questions that pops up, please send us an email. Any other questions, we are here to respond and to answer. Thank you. Thank you very much. Thank you. Zoom. I hope you're off. Okay, stop it. So there's an open bar on the 8th floor. You're very welcome to join us there. And we hope to see some of you for a drink. I understand traffic emails, clients.